Alrighty, well, I'm joined here by Ashley Turner from the TurnKey Group, Century 21 Fusion, of course, and Geoff Rathgaber, the mobile specialist for RBC. Talking today, we're speaking about mortgage changes coming up here on January 1st.
Yes, so on January 1, a hangover from maybe consuming too much champagne isn't going to be the only thing you're feeling. As a home buyer or home seller, you may be feeling maybe a little bit of a change from the new mortgage rules that we're seeing the federal government bring in an attempt to cool the housing markets in Toronto and Vancouver.
So I guess what these changes mean for homeowners and home buyers out there?
Well, it's going to be a new stress test. So a year ago, a stress test was brought in for high ratio mortgages. So any mortgage that has less than 20% down was now required to have a higher qualifying rate to make sure that clients can afford those homes if the rates do go up, because eventually the rates will go up at some point. This is now a carryover of that into the conventional market. So if you've got 20% down or more, you're now going to have to qualify at a rate at 200 basis points or 2% higher than what your contract rate is in order to qualify for that mortgage. So it'll impact buying power by at least 20%. So anybody in that conventional space, anybody in the $1 million plus space, because default insurance does not insure anything over $1 million. So if you're that higher end home buyer, then this is definitely something you want to pay attention to.
Yeah, this looks like widespread, based on like what you can afford out there on the markets, correct?
Yeah, they're talking about it taking people from a $700,000 mortgage down to pretty much a $500,000 mortgage if you're...
On an average family income, let's say of $100,000. So if your family household income is $100,000, today you can buy a home at $680,000, you know, based on just what the qualifying rate is today. As of January 1st, that will go to $557,000. So it's a substantial drop. So if you're in that position, I think where clients really need to be aware is they need the advice first and foremost. You know, whenever there's a new rule change, everybody tries to skirt the rules. They want to try and get that bigger home or that, and sometimes a little bit of prudence is important. And so I think the change is good. It's just going to mean they need to get the right advice on the real estate side. They need the right advice on the mortgage side to make sure they're not putting themselves in harm's way when the rates do change. So that's what we have to really be careful on.
So I mean, this is being put in place to slow some of the housing markets, some of those hot ones in Toronto and Vancouver, of course. But how will this affect our housing market here in Saskatoon, which is more of a buyer's climate right now?
Typically what we see, definitely last year when the change came into unconventional mortgages, so people putting down less than 20%, there was definitely a rush for people to buy houses before this closing date, because again, it would have greatly diminished if they could qualify, basically, period, and what they could qualify for. So we're expecting to see something like that, I think, again, with people that are going to be greatly affected. Well, I want to get into this next level of home, so I really need to get into the market before these changes take place. But I think, again, importantly, something Heather and I have been harping on this whole time is going into this, though, make sure that you're priced well, because if you feel like you're in that higher end level of home where home buyers are going to be affected, the people that are going to be looking at your home are affected, you've got to entice them to get in before this rule change comes. Not saying that you're not going to be able to sell after January 1, but there's going to definitely be obstacles.
And that was going to be my last question for you. Advice for people looking for a home now. You're suggesting now might be the time ahead of January 1st. Well,
I would say get in, have a consultation with a mortgage specialist, maybe someone at RBC, and see how this is going to affect you going forward, how this is going to affect your family, what you can qualify for. And we were saying it's very important if you're making if you're qualified for your mortgage, if all the paperwork is done, but maybe you're not taking possession until after January 1, you're doing a new build or something like that. Make sure you're done. Make sure you're not making any changes to that contract. You're not adding, you know, a new type of flooring and making a change order which affects your mortgage, because then it's going to trigger all the new rules for you.
That's probably the most important thing for people to understand right now between now and January 1st is exactly that. If your possession is beyond January 1, everything has to be tied off now. And if it doesn't, then it could jeopardize that home closing.
Well, some very important information here, Ashley and Geoff, for another edition of Real Estate YXE. Thank you guys for joining us this morning and sharing some of this key insights with us. And we'll have more global news coming up in just a few minutes.
Thank you.
Real Estate YXE is brought to you by the TurnKey Group. Unlock your lifestyle.